Hey, good morning, everybody. Welcome to Thursday. Hey, it's June 13th. Glad you're able to join us today as we get ready to kind of talk about what's happening in the world today and where we are. So, looking forward to that. If you just hang tight for just a few minutes, Dave will be with us momentarily, and we can get started looking at some of the things that are happening today, especially in the oil market. Hey there, before Dave comes on board here and we get to talk to him, I do want to remind you, yesterday was a little bit of a down day, but after an updated day before. So I want to remind you about our Understanding Market Corrections report, free to you. All you have to do is text the word market to 863-285-3815. That's right. Just text the word market to 863-285-3815 to get your free report on understanding market corrections.
Like FM. Oh, Bruno there. Good morning. It's 8:40. It's 20 before 9 if you're still hooked on analog. Time to check in on your money and find out what's going on Wall Street. Or what's going on in the Straits of Hormuz, because they're messing with tankers, and that's screwing with the oil price. Let's go downtown to the offices of Statler Financial Services in downtown Sebring. Phillip Statler is on the phone, and we were talking before we went on the air, Phillip. It sure is nice that the price of oil was falling so rapidly, because it sure shot up when they started attacking tankers in the Strait of Hormuz, didn't it?
Yeah, it really did. I mean, we've got it up about 4% right now. But before we went on the air, what I tell you, we're going to talk about oil and apples today, right? Apples and oil. What a combination.
And I didn't have the foggiest idea what you were talking about, but it seems there's a crop issue in China, I gather, huh?
Yeah, they've been battling swine flu, so the price of pork's gone up. Now they've got an issue with one of their crops, apples. They've had some bad weather has really hit the apple crop. They've seen prices increase by about 25%. So they've seen a decline of about 30% in the consumer buying apples, and the people are not happy.
I'm not enough of an aficionado of Asian cuisine to know whether or not apples are an integral part of their food. But, the swine flu thing, I know pork is a substantial part of the Chinese diet. This trade war just is not working out, because the one weapon they really have that can hurt us is agricultural commodities, and now they're stuck buying our pork, and now they could be stuck buying our apples.
Yeah, it's like, okay, what else can go wrong for the Chinese people? Because that's two major things right there. And if you got to think, if apples are having a hard time because of bad weather, what other crop is going to be damaged by their weather conditions over there?
Well, that's the thing that hit my mind when you told me that apples were suffering. You got to assume some other crops, maybe not row crops, but at the very least, other fruit products over there are probably in a world of hurt. And you said it well. This is not working out. The luck is not going China's way in the process of our little trade kerfuffle with them.
No, it's really not. So it's going to be interesting to see what else flows from that. And maybe these little things will bring everybody to the table a little quicker, and we can get this thing resolved.
A little leverage never hurts a bit, although I don't have a lot of faith in the Chinese government to not just say, let the people starve, we're going to stick this one out.
Well, no, they could see a revolt otherwise.
Yeah, that's true. And China is a lot more sensitive and responsive to their population base than a totalitarian government generally is. I mean, you can't really parallel them up with North Korea the way we used to be able to. The government is strong arm, but they seem to be responsive at times, just from what we can leak out of the mainland Chinese press and whatnot. So, yeah, this might have an impact, and it's going to be kind of interesting to watch over time. Put that together with oil and apples, and we also have an economic report coming out of our government. Let's start out with the unemployment claims, because that probably isn't going to affect the market that much. It was up a little bit, 222,000 last week. I was kind of surprised that the market was expecting better, because we're still down in the abnormally low zip code range.
We really are. You're right. We are, but it was down. Depending on which economist you look at, they expected 216 to 217 new unemployment claims that came in at 222,000. So that was 5,000 to 6,000 more than expected. Was that a big deal? That's not a big miss, but still a miss. And it's a data point, as you and I say often. We'll have to see what the next week's data point looks like. And if it continues to move that way, then it could be an indicator.
Yeah, we may be establishing a small trend, although it always needs to be thrown out that about 250 is at least traditionally considered the normal sifting and winning in the employment market. So my biggest indication is starting to think that's wobble more than anything else. We'll find out. Import prices, the other front, and we were starting to do this, but my record was running short. Import prices in the United States went down by 0.3% last month. And that prompted a big from me, only on the grounds this was kind of the first month in May that we had any substantial tariff action imposed, but still our prices for imported goods actually went down last month.
They did. They went down 0.3. And a lot of that, though, I think when I drilled down was based on oil, because oil dropped so much, and we still import some oil, and we look at that, and that was still, I guess, better than expected, because we expected to go down about 0.2%.
Yeah, I was scrolling down that, and it was down 0.3%, even excluding oil. So this is one of those head scratchers that I'm not sure I understand.
Yeah, me either. Sometimes economies are tough to gather.
Absolutely down the line. So we're sitting there after a day yesterday where go back to where we were. We had an off day again yesterday, but you talk about 43 down in the Dow. I'm going to call that kind of a directionalist day with a pink tinge. We didn't have a lot affecting the market, and the market didn't do much in response. Do we have any companies that are reporting results that might move the market a little bit today?
We've got a couple. Whether or not they'll move the market or not is another story. But we got some specialty retail shops. We got Lululemon, which is the athletic apparel maker. They came in 4 cents above estimates at 74 cents a share. Revenue also well above forecast. And the key indicator for retail is same store sales, and their comparable store sales were up 16% compared to an estimate of 11.5%. So, and they raised their full year forecast. So they're getting a pretty good bump today. As a matter of fact, they'll open right now at a new 52-week high at $180.30 a share, up 5.5%.
That also kind of on a sector basis fascinates because they're a high side outlier on the specialty retail because our picture hasn't been very good on that this year.
No, but their stock has had a really good year. I mean, year to date, they're up almost 41%. So they've had a good run this year. They've actually updated some of their product line and trying to get, when they first came out, they were more focused towards women, and now they're actually branching out and including some men's apparel.
So I might wear a Lululemon bicycle jersey someday, huh?
Yeah, it's a possibility.
In pink, right?
Yeah, there you go. Hey, the other one that I have, Dave, is Restoration Hardware.
I saw that one.
They had a really good quarter. I mean, they beat by 30 cents a share. Came in at $1.85 a share. Their revenue came in above expectations. And, they're a luxury home furnishing retailer. Their stuff ain't cheap. And they raised their full year forecast. They've said they've been able to go in and selectively increase the prices on certain items to help offset some of the higher costs from the Chinese tariffs.
And they said some of their manufacturing was going to move onshore into the United States as well, which made investors happy. It insulates them against the tariffs as well.
Yeah, it really is. And I'm sure that you may not be following this one on your tip sheet as the highest gainer, but it's up almost 23% this morning before the market opens.
That's amazing. Good to see good news in the process. And, we always talk about how one stock doing real well can change a sector and bring it upwards. Maybe it'll give us a little bit more of a green boost this morning. 45 minutes before we open, I got a little bit of green that I'm seeing anyway on my delayed quotes. Which way we heading so far, Phillip?
So we are heading up, and we've pretty much maintained. We've cycled up and down a little bit here and there. But the Dow's up about 1/4 point. The S&P 500 is right there with it, about 1/4 point, and the NASDAQ's up about 1/3 point. So all those things are in the green, heading the right direction. So is gold and silver, both up about 1/4%. Crude oil, though, is kind of the outlier. It's up 4% today as we head in because of those two tankers over there getting, I guess, torpedoed from what it looks like, up to $53.18 a barrel.
Which is kind of why I alluded to the fact that, thank heavens, things were on a downtick for a couple of days, because 4% just gets us back up into the trading range we were talking about earlier, right?
Yeah, exactly. So still not bad at 53.
Absolutely. Looking around the world, Asian rim markets generally, maybe apples do have an impact. They're all in red ink at the close early this morning. Europe is generally trading up. Bonds are going back down again. Federal yields are going back down again today, which is curious with green ink on the stock market itself. Phillip, somebody want to stabilize and figure out what a course of action would be in an uncertain world? I'll bet you could help them out. How do I make contact with you?
Hey, they can give us a call at 863-382-0037 to schedule their free kind of financial x-ray report to make sure that they don't have too much risk in their current portfolio. The other thing they can do is pick up the phone, their cell phone, and text us. Text the word market to 863-285-3815 to get a free report on understanding the market corrections. And then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And streaming on newstalk730am.com. Phillip, thank you so much. We'll catch you on tomorrow, okay?
All right, man. Thanks. I appreciate it.
Thank you. Be well, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Stop every.
So again, folks, as we kind of wind down today's show, to remind you again, the free report on understanding market corrections, all you have to do is text the word market to 863-285-3815. Hey, I want to thank you for joining us today. I really appreciate it. I look forward to speaking to you again tomorrow. Have a great day.